Hello traders, Jeff with optionboxer.com, back again after a little bit of a break away from videos and posting on my website. But I'm kind of excited because I've got something to give away today, something that hopefully that you can get some use out of, and maybe it'll help you kind of keep track of your covered call positions a little bit better. So I am making this spreadsheet that you see on the screen available for free for anyone that's interested. You can download it at optionboxer.com, and I'll include a link to that in the description of this video. If you like the spreadsheet, or if you like the videos that I make, or if you've seen any of my other videos and you like those, please do like and subscribe. And make sure you hit that notification bell. I can promise you I'm not going to flood your notification bar on your phone with constant updates or new videos. I just don't have time. But please know I'm not a registered financial advisor, and this video is not a recommendation for you to buy or sell any security. I am simply making something available to you that may or may not help you. And if it doesn't, then you can certainly delete it or never download it to begin with. But we'll walk through here, and we'll just kind of hypothetically play through some of these fictitious trades that I've set up on Microsoft, and I'll show you kind of what it's doing and how it all works. But again, it'll be available for free at optionboxer.com. And there'll be a link to this spreadsheet in the description. So the first thing you're going to see is a number of contracts, and then it's actually got 1 equals 100 shares. I'll explain that momentarily, and then the next column will be the strike, and then the closed dollar amount. I'll explain that part momentarily as well. Then you've got a credit received if you sold the short call, and then a debit, was it closed or assigned, and then you got the net, and then the closed dollar amount. Excuse me. And then right here, you've got the ticker symbol of the company you're trading, the current price of the company. This will need to be updated manually each time you open the spreadsheet. So, if I entered the first trade here, or the first sold contract, and then a month went by before I log back in, you'd need to update with the current price so that your profit and loss will calculate appropriately. I guess you could do it without it. Once everything's closed, it's going to calculate appropriately anyway, with or without the current price. So if you didn't want to mess with that, you could just wait until all your positions are closed, or until you're flat on your shares and you don't have any shorts outstanding. But that being said, there's also another way, just so you know about it. If you want to get the current price without having to enter it in each time you log into, or each time you open the spreadsheet, you can come up here, and where it says Microsoft, just click on the box, hit stocks. It's going to change the formatting, and then you're going to have to do some kind of correcting and making it look a little neater. I didn't like it. That's why I opted just to enter it manually each time I log in. It's not that much more. You'll notice I've done away with any date, any mention of the date. I just felt like that was mindless data entry, and I got tired of entering the date in all my spreadsheets. And I don't really think it helps that much. And plus, if you were curious about a trade, let's say you traded this one at 431 credit, you can always go back to your broker, look at the statement, and figure out what day you traded that if you did need that information. So you could always uncover it. In the meantime, I'm not going to enter each date that I made a trade throughout the life of a covered call spreadsheet. It just doesn't matter that much to me. If it does to you, you could always create another column, add the date, and then use it accordingly. Also, with that being said, none of these formulas are absolute, which means you should be able to just insert a column at will. Now, I'm not going to because I don't need one. But if you choose to add a date to the front, you can certainly do that, and I don't think it'll affect anything. If it does, you can reach out to me at jeff@optionboxer.com, and I'll try to help you get it sorted out. But that being said, the first thing you're going to want to do once you get this is you're going to want to highlight the entire page here, and then go ahead and copy that, and then create a new sheet, and then click in the first cell A1 and paste it. And the reason I'm suggesting you do that way you always have kind of this template here that's that is functional and works. And then you'll also need to do this if you decide to open more than one covered call position. The sheet's only designed to address one asset at a time. So in this case, we're using Microsoft. If I wanted to open a covered call on Apple or Ford or any other company, I would just simply create sheets to be able to track those investments. But in this case, we're using Microsoft, and so I'll rename the sheet MSFT just so I know that this is the information from Microsoft. So I've already got some fake or fictitious trades, I guess I should say, hypothetical in nature in here. And let's go ahead and just start with column number 1, and we'll talk about this first trade. So I bought 500 shares, and you'll see the purchases here. You can purchase shares up to 10 times, but there are some caveats here, so do pay attention to, I guess, what I'm about to share with you. So I bought 500 shares. I sold 5 contracts. Bought those shares at $250.39 for a total of $125,195. And I'm going to go ahead and take this. Well, I'll leave it on for now. Let's just leave it. So I sold the contracts at a $245 strike, and I collected a $6.61 premium. It does the math for you and gives you the total of that. Let's say a month went by and I needed to make another trade. My shares had expired worthless, and so I got to keep the entire credit that I received. Did basically the same thing. This time I just sold a little higher strike, got a little less of a credit, and same thing happened. A month went by and I was was able to maintain the full credit that I received at the outset of the trade. However, on this day, whatever day in the future this may be, I decided I was ready to close the position, and and I wanted to just get out of it for whatever reason. Maybe I needed the capital. Maybe I didn't want, I don't know. There'd be 100 different reasons, I'm sure, to want to close a position, and any of them would be okay for me. So you're gonna have to enter 2 closing orders here. If the shares were going to be assigned, and you were happy to let them be assigned at the strike price that you sold the contract at, all you would do is you would simply leave the debit box blank, and you would just click yes on the closed assigned box, and then that would be all you have to do. But if you were going to voluntarily close a position, you'd have to close both the short contract. Now, if you just wanted to close the short contract, or the short contracts in this case, you would simply just put in the debit there, and that would be all you needed to do. You would leave, your shares would be there, and you could just wait till another time in the future to sell more contracts. But if you did want to close the shares, this is the way you'd have to enter it in. So you'll notice I put the hypothetical share cost at the time of the sell, or the time I got rid of the shares. It was $245.12. Again, I made that up. But this is the key here. It needs to stay in the contract format. So I had 500 shares, and I had to denote that or indicate that with 5, and that's why I put the 1 equals 100 shares. That way you can kind of do some quick math. If you have 10 million shares of something, odds are you're not going to be using this spreadsheet, so it wouldn't be that complicated for you to just figure out. But anyway, so in this case I had 500, so it'll be 5, and then just make sure you push yes that the position is closed, and then it'll calculate accordingly there. And then so that position would effectively be nullified. And then sometime in the future I decided, okay, I'm going to open 500 more shares. Bought those for $241.98. And you'll see here I sold 5 contracts at $561, but the shares were assigned. You'll notice there's no debit there, and there's no closing stock position. So the shares were assigned at the $235, and I assume that math checks out. I didn't look at this particular one, but you'll see that's noted there in the closed amount. And then sometime later I bought 200 shares. Let's see, did I get it right? No, I'm sorry. I bought 500 shares again, and then I sold another one, and you can see it got assigned, and I was out at the strike price. And then let's see, at this point I bought 200 shares, bought it for $265 a share, sold 2 contracts, and then finally here at the bottom, or actually these were closed, just in the open market. I decided I wanted to get rid of them. And then finally, again, I bought 300, but you'll notice I still had the 200 from previously. I didn't sell or close the shares, so my total is 5, so I could sell up to 5 contracts. And then of course it closed here as it was assigned. But if it was not assigned, it would show you your current profit and loss based on the current market price. Let's say Microsoft rallied to 305. well, it's going to highlight that based on the number of shares that you still have open. And then let's say you did get assigned at this price. Well, then it's going to go back to whatever it calculates as, with 288 as the strike price there. It'll also, if you let's say Microsoft falls to 240, well, it's going to show you what would happen to your profit and loss there as well. A couple things to note is the equity cost. The equity cost, the way I list that with the minus sign, I always just, maybe I think of it in accounting terms, but I see it as, you had to pay money to get it, so you're actually down money. Even though you have that as an investment, that is an asset. I guess in the accounting equation, it wouldn't really be a negative. But in my mind, I see it as you had to pay money, so you're down at that moment, and then so I just leave the negative there, and then and I calculate it that way. Others will disagree with that approach, I'm sure, but that's the way I do it. So you don't have to worry about the minus there. And then the cost basis is simply taking the equity cost and subtracting out all of the credit that you've received, and then the profit and loss is calculated based on all of these cells here, and then these two columns here, and then of course the current price as well. So a fairly complex calculation, as you can see here in the formula tab. It took me a little bit to get that one corrected and get it ironed out appropriately, but that's about it. I think I covered most of the scenarios you may run into when you're tracking a covered call. But for some reason, if I missed something, again, please do reach out to me, and please do hit that like and subscribe button.